Hey guys, welcome to the Trade Genius podcast. Bob and Phil here as always. Guys, if they can't pay their bills via tax receipts, they're going to come after your wealth. We're going to talk about that in this video. Let's dive in.
Trade Genius.
So Bob, I see a disturbing trend, an idea not only being floated in this country, but other countries as well, Europe as well. Take us into what is so concerning about what these governments are proposing.
Yeah, so we're past the point where you can generate enough income tax revenue to pay not just the debt, but even the deficits. And they know now inflation is becoming poisonous. Just look at Kamala Harris here getting blamed now for inflation. She was the tie-breaking vote on the Inflation Reduction Act, which caused inflation to go up 20%. They're doing focus groups in Philadelphia urban area, and the blame is squarely being put on the federal government, which she is obviously a part of. So we're seeing a theme here in Europe, and today the Biden administration came out with a proposal, and this is what they do. They're preparing the ground here. If you would throw this chart up, they're looking for a 44.6% capital gains tax for people making over $1 million. Now, let's assume for a second this thing gets passed, Phil. If this thing gets passed, that means we would see an absolute destruction in the stock market, number one. Number two, capital formation would be gone forever. And number three is that, they basically will be squeezing everybody down into a tight income group gradient from rich to poor. Or the rich will just never sell. And so you have a situation where this is actually less of a tool for generating wealth for the government and more of a tool to basically eliminating competition from the government and having the government the only ability to create capital and to deploy capital around the world. Europe is on this train too, and very, very dangerous precedent. Look, we always end up in these environments at communism, or we get a sharp right reaction. And I think this is the election that's going to bring it up. That's why I said 2025 is going to be a very interesting year. Even if the Biden administration with Kamala going into the next administration, even if it's Trump, what they're doing here is if they lose, they're just going to keep fanning the flames of the poor people against the wealthy and against the right, political parties, basically to foment, some civil disorder. And that's why, if you're going to make some good money here before the election, after the election, if there's a euphoric bounce, you're going to want to quickly get yourself positioned defensively. And look, I was going to show another chart talking about delinquencies. I was going to show another chart talking about employment. Recession's all but guaranteed, Phil. We can't avoid it. And I think we're going to have a situation here where the fourth turning, people you can Google that, will be well in force in 2025. And I dare say into 2026, there's a lot of excesses to clear off the books here in order for us to have an opportunity to, spring forward again, in 2027, 2028. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, I have a similar view. I think the end of the decade is really going to be great, but you can really supercharge, I think, your returns into that, though, if you can navigate the next 18 months or so, maybe 24 months, with stepping out of this market at the highs and either being in cash or being long bonds or waiting for the dip and then buying in. But you don't want to have all your wealth draw down over the next 24 months without doing something defensive here, even if it was just going in cash, right? But there's other things that we can do that can make that look like a loser trade as well. You can suck the divvies out of these yield max products. You can be in inverse things. You can be the long bonds, which also not only appreciates looking at a double, for example, on TLT in an environment like that, but also TLT has a yield. Or you could just go to buy Treasuries Direct, right? treasurydirect.gov. So there's a number of different things you could do that would even beat out holding cash during a drawdown. But if you didn't want to sweat all that stuff, you could just simply be in cash. But I agree with with your outlook. I agree with the fourth turning timing as well. That's been pretty spot on. And I believe basically that completes into 2026 or roughly somewhere in there on that fourth turning timing, if I read that correctly. And then we, like you said, spring out. So I do agree with that. And so, yeah, I mean, I think at the end of the day, these people are, they're floating ideas that the voters aren't going to go for. And so that's going to be an interesting thing to see play out. How that plays out, I'm not 100% sure, but I have a feeling that the voters gotten used to the handouts. And I think that ultimately is going to continue. And that's why I think ultimately, even on the other side of this turning, you're going to have higher inflation expectations. The central banks, the governments are going to tell you to get used to higher inflation rates. And ultimately, you have to be in hard assets to defend against that.
Yeah, and I think what people are waking up to the fact is that, the handout culture is not producing benefits anymore. So I think, what's happening here is the people that are in charge of government, they don't want to take the pain. Them and their constituents, they want to pass the pain somewhere else. But the problem is the pain is now spread across everybody. And the majority of the people aren't getting the handouts. So they're going to turn their wrath onto those that are. And I think you'll see it with immigration. You're starting to see it already in Europe. That's an easy target for people. Why are these people getting stuff and our veterans aren't? Why aren't our homeless getting it? So you're going to see, and I'm not picking one way or the other. I'm just saying you're going to see the pie it can't get any bigger. The debt can't increase it any bigger. And now it's going to be, it's going to be win-lose. So it's going to be, and that's an environment you don't want to be in terms of an investing environment. And you brought up some good points, Phil. With TLT, people that buy bonds, you can get a 20-year or 30-year bond and you can do what's called zero coupon, where you basically buy it at a discount and it buys up for you over time. So there's a lot of ways in which, we're going to be able to successfully navigate this. It's just that, you're going to have to get your mentality changed to last 14 years of buying the dip, because it's really going to be selling the rip is where you're going to make your money here in the next 24 months when it begins. And I put that clock on after September, but more likely probably after the election. I still think Trump's probably going to win. There's probably be a euphoric bounce and that's going to get wiped out. But if Kamala Harris wins, the doomsday clock starts right away.
All right, guys, well, let us know your thoughts on today's topic. Agree or disagree? Post your comments below. We love to read them. As always, check out our stuff over at tradegenius.co. We'll help you navigate these markets, and we'd love to see you in the room. We'll see you on the next video, guys. Take care.
Trade Genius.